Felix here, and welcome to this live stream this morning and a day where markets are calming down. The Xanax has officially kicked in and things are not looking quite as horrifying and terrifying as yesterday. So I want to walk you through why the market panicked yesterday, what the actual facts are, what the opportunities are today, and help you make the most of this opportunity, because this is a big, juicy opportunity. The last time we had an opportunity like this was 7 months ago, I'd say 6 or 7 months ago, August. And we made a lot of money out of that. So my goal is for you to make a lot of money out of this here. Wasn't I the following is financial advice, just an old banker sharing his thoughts and his insights. And my aim is always to make you what? Smarter, better informed, better educated, so you can make smarter decisions on your own and that you don't need me. That's really ultimately the goal here. So let's jump straight into it. I'm going to share my screen with you here for everybody complaining about my drinking slurping, which has been quite a few of you, quite funnily. I have put in some sort of thing which apparently removes the slurping sounds. Can you still hear them? You can still hear me slurping? Let me know in the chat. Now, Bernstein, analyst outfit out there, they're basically saying, what the heck went wrong yesterday? And they're saying the first thing is there's a misunderstanding over the $5 million number. So DeepSeek came out and said, we built OpenAI ChatGPT for $5 million. Now, what the press release over the weekend, which is always a little suspicious, because if you want to oh no, you love the slurps. No slurp free. Terrible, isn't it? No more ASMR slurping from Felix. But they didn't tell us that they had lots of models before this model and they paid for those separately. You see what I mean? It's a bit like me saying, I don't know, there's some pomegranate juice, which I absolutely love, which I got in Dubai. I could say, this cost me only $3. Now, I could also include the return first-class flights, 14 days in a 5-star hotel, and endless expenses related to it, in which case it would be more like much larger sum, right? But if I withhold that, then this is a very cheap glass of pomegranate juice. If I include that, it becomes expensive. That seems to be a little bit what DeepSeek is doing here. It's a little sneaky, isn't it? I like the slurping. Means he's live. Right, so no more ASMR on this channel. And so basically they're saying, look, they distilled this model down from a larger model which cost more to make. Now, the actual pricing is far below what OpenAI is asking. So they're selling it far, far cheaper, much more aggressively than OpenAI. And is that a good thing? Is that a bad thing? Well, unless you're OpenAI, which you're not because it's privately held, good thing for everybody else. Why is it a good thing for everybody else? Well, does that make sense so far, by the way? If that makes sense so far, put a thumbs up in the chat. These guys who are spending, they spent over 200 billion last year. Slurp filter works great. 200 billion they spent last year. This is Microsoft, this is Amazon, which is Oracle, which is Google, which is Meta. If they can run models cheaper, first thing, they could spend less on AI infrastructure, right? Thanks for the thumbs up there, Max and Grivbo and Kit and John. Tangleman, thanks very much. That makes sense. If these guys could get the same output, run the same models, offer the same services like Microsoft Copilot, which is popping up in my face every time I open bloody Microsoft Office, and I don't want it, but they're forcing it upon me. It's just the way they always do it, isn't it? If these guys could spend not 200 billion or less than the 250 billion they are threatening to spend this year, what would that do? What if they spend less money? Well, if you're a Microsoft, an Amazon, an Oracle, a Google, or a Meta shareholder, it would mean what? Higher profits, higher profit margins, because they spend less money on NVIDIA and have more money left over, which means more profit, right? Joe, I love you for that. Thanks very much for sharing that. You said the Wall Street Protocol, which is our sort of flagship stock coaching program, saved me a $21,000 loss in this market. The risk management guidance works. That's what it's all about. A word on that in a moment as well. But would you be upset if the company that you have shares in reports higher profits? Would you be upset? Tell me if you'd be upset. Say yes in the chat, or write upset, or say no, I wouldn't be upset. Right. Let me know in the chat. Make sure you actually have a heartbeat and a pulse, and this is making sense to you. Gary loves Copilot. In all fairness, I haven't tried it, so I'm just, No, you wouldn't be upset. You wouldn't be upset. No. Okay, Christopher, Claudia, the Scottish guy, you're all saying no, right? You wouldn't be upset unless you're shorting. Yes. Okay, brilliant. So that's a good thing. Right? So what are we upset about here? Okay, NVIDIA shareholders, a little bit, but NVIDIA is recovering already this morning. I'll show you just in a second. But let's dive a little bit deeper into this. Tom Lee calls this the worst NASDAQ overreaction since the 2020 pandemic outbreak. And he says, buy the freaking dip. Dan Ives, another analyst you can never get off the screen. I think that's what these guys all do all day long, isn't it? They say it's a top 3 buying opportunity I've seen in a decade. The market got this one wrong. So he's saying buy NVIDIA, buy Oracle, and everything else. And we can't really do a video nowadays without the Donald, because the Donald is active. That guy seems to be pretty hard working. He's like the hardest working CEO out there. He is calling for Congress to abolish the income tax. In all seriousness, you got to give this a moment, and then we go back to DeepSeek and everything else. Because if you had no income tax, what would happen? What would happen to you if you're American and you would pay no income tax? Would you have more money or would you have less money? Make this really simple here, right? Just so you understand it. Is it more money or is it less money? Tell me in the chat. Tell me in the chat. I want to know. Now, let's just assume you have more money, which is probably the conclusion you're coming to, right? Yes, I can see it. You guys are coming to that conclusion. What would then happen? Well, what would you do? You would spend more, or you would invest more, which is putting more money into, say, shares or property or some sort of asset. And what would therefore happen to companies and stocks? Well, if you spend more, you're spending it on something that a company provides as a service, usually, right? Pretty much everything you buy is provided by companies, more, exactly. And if you invest more, well, you're paying for those shares. So if this happens, do share prices go up or down? Think this through, right? Share prices. People are spending more on goods and services, and people have more money to buy shares. You're creating demand at the consumption level, and you're creating demand on the stock market level. Does that make share prices go up or go down? What's the stock ticker for DeepSeek? You can't invest in it. It's private, owned by a Chinese hedge fund. Shares go up. Yeah, exactly. Right now, things will go up. So if this comes true, you're going to get the biggest freaking demand bull market the US has ever seen. And yeah, there'll be a little bit of inflation in year 1. There'll be no inflation in additional in year 2 because tariffs are a one-time event. It doesn't get more and more expensive. It just becomes more expensive one time. And then you're going to start buying more domestic stuff, which will also be good for the Americans. So it doesn't really, Rob, in the long term increase inflation. It's a one-time event. So for one time, it creates inflation. 12 months later, that inflation will be 0 because it'll be the same as 12 months prior. So it's not really a long-term inflationary thing, and therefore it isn't something that the Fed will need to raise interest rates for because they know it's a one-time thing. Make no sense to raise interest rates as a result. So up bigly, exactly, says Scott and Logan, precisely. It'll be up, everything will be up bigly. And then look at yesterday. What is this? These are retail. That's you and me, us independent Muppets. And what did we buy yesterday? What did we sell yesterday? See how much retail was buying yesterday versus how little it was selling yesterday. So retail is on the money to buy the freaking dip, and they did it yesterday. And I'm rather proud of retail for doing this, to be honest with you. The pen says I can't use it anymore. This is Microsoft's good work. So the only question then is that you probably had yesterday. And if I look at the poll here, I asked you if you're honest with yourself, did yesterday spook you or did you feel a little uneasy? And 57% of you answered that honestly and said you felt a little uneasy, right? Because that's natural. It's normal to feel a little uneasy when the market goes down. So the question really on days like yesterday and like today is like, well, what do I buy? How do I know what to buy? And how do I know what I close on a day like yesterday and what do I hold on to? And most people haven't really got a process. But if you have that answer before a day like yesterday happens, it'll happen again. It'll happen in about 6 months again. Guarantee you, because it happens without regularity. The market tanks 30% once every decade, every 10 years, 30%, right? And there are much bigger crashes. We have 60, 70% crashes, and those are normal to happen. And they could happen tomorrow, something weird happening. So if you are not prepared for that, you're doing what? You are going to get freaked out. You're going to get scared. You're going to do things that are not ideal. And most importantly, you're going to miss out on opportunities, right? There are always opportunities. If you watched me yesterday live, we sold some put options, for example, on SoFi, which I thought was a good idea. We'll know whether that is or not. But whether that's a brilliant, I think it's a brilliant choice. But the market will tell me. But we can spot these opportunities by understanding volatility was high, fear was high. That makes options expensive. So my first thought is, let's sell options on something that got unfairly pummeled today on good earnings. So there is always an opportunity. So if you know that opportunity, will you make more money or less money? If you make more money, put a 1 in the chat. If you make less money because you have more knowledge, then put a 2 in the chat. Let me see it. Put a 1 in the chat if you think more knowledge brings you more opportunity. And Mike sharing yesterday and reinforced need to set up stop losses. Okay, Kit says 1, Arif says 1, I'm Andy says 1, Eileen, John, Griffbo, Mr. Proper, Jason. Okay, it's getting a little quick now. Brilliant. Okay, I love you guys for that. Thanks for participating. Thanks for showing me that you are here and you're listening and not just sort of background noise. So what I said to you yesterday, and I'll say it to you again, if you want to learn from people who've done this for decades, you can learn from my mentors because that's how I learned. And we give you unlimited one-on-one coaching. Like you just hop on Zoom calls one-on-one on days like yesterday. You know how busy our mentors were yesterday? They were on calls back to back. We were running special group live sessions to make sure people are calm and collected and they know what to do and they know how to grab the opportunity. So if you are interested in possibly being mentored, there is zero pressure here. It's just you're curious, find out more type thing. Then you can book a call directly without any hoops to jump through at felixprehn.org/freedom, because I want you to get to freedom, financial freedom and life freedom. And you can have a chat with my guys and they're lovely. And our mentors team are investment bankers, hedge fund guys. We have 3 retired market makers. You know it, people who've really managed a lot of money. Hundreds of millions and billions of dollars for big institutions, for big banks, for big hedge funds, worked on the trading floor in stock exchanges and therefore know what to do because they've been through crashes that are way worse than this one we've just seen. 2008, 2007, 1990, what was it? 6, was it? I can't remember. Those are the people I turn to when I want help. So have a chat with us if you like, felixprehn.org/freedom. And let me run you through why yesterday was also a calm day. Financials, that's banks and mortgage companies and so on, they closed yesterday at an all-time high. We have some financial trades open. They actually did well yesterday. 22 out of the Dow Jones stocks closed higher. Transport stocks closed higher. The Dow Jones is only 1% below its all-time high. Apple had its best day in 4 months. Amazon is at an all-time high, and 349 out of the S&P 500 stocks. 349 out of 500 stocks closed higher yesterday. Is that bad news? Is that good news? Let me know in the chat. Each one of these. Is that good news or bad news? Put good or bad in the chat. Right? Momentum overall is up 7% so far this year. Small caps outperformed. Mid caps outperformed. So is that good, or is that sign of a disastrous market crash? The end is near, like CNBC would have you believe, right? I think it's good. I think it's bad. It's bad for you. Great, exactly. Patman says 1, which is good. Yeah, I'm with you on that. Thomas is asking about Tesla earnings. Tesla earnings, traditionally, not the greatest event for the Tesla stock in the world. Now, do I have my Tesla position open? Yeah, I do. We still have a nice 183% profit open there. Dipped a little bit from where we were, but I think we'll get back there. The market's fine. Precisely. Alrighty, so shall we look at some of our favorite stocks and see what opportunities are actually out there? If you want to be like Joe, one of my students, who said our program saved him $21,000 loss in this market. He just wrote that 10 minutes ago. The risk management guidance works. Then, as I say, book a call with us, felixrenzelog/freedom. The link is down below, and have a chat with us. Now, let's have a look at the pre-market first. This was yesterday. It wasn't that. Look at all the green, right? You see what I mean? There was a lot of green there. Google, Microsoft were down. Nvidia was down, hit pretty hard. AVGO as well. These are companies that are directly making chips or involved in the data centers thing. Now, Tesla is a large customer of Nvidia. So if Nvidia chips are less needed or become cheaper, then that would be good for Tesla, wouldn't it? So why the heck was Tesla down yesterday? Makes absolutely zero bloody sense. So pre-market, what are we looking at here? We're looking at Nvidia recovering somewhat, 2.5%. We look at the chart in a second. Meta and Google recovering a little bit. Oracle recovering a little bit. So the stuff that got hit the hardest yesterday is actually up. It's just a way to force a broader market inclusion into growth. Mark, well, I don't know. I mean, there's some conspiracy theories around how DeepSeek is owned by a hedge fund. And if you knew you were going to put this statement out, well, you could make a lot of money. Could have made a lot of money yesterday. If you knew yesterday was happening, you could have easily made like 300, 400% on a day like that. If you knew it was happening. I'm not saying that's what happened, but that's what some people are rumoring out there. Patrick, I appreciate the like. Thank you very much. Mark says risk management saved me $14,000 yesterday. That's amazing, my friend. And I'm very, very glad it does that. And I'm very, very glad that you get to see in real life, this is what Mark's saying, what to do. Because it's going to give you more confidence to keep doing this. Yesterday was a blip. It was a dip. It was a little thing. It wasn't a really scary crash, right? Because the market overall didn't move that much. So it's important to have these things in place because we get emotional these days like that. So you want to have your automation set up. Private prison stocks. Yeah, it's a trade. I totally get it. I don't have the morals for it. I just can't do it. I think private prisons are a horror show. You look at the percentage of black young males like in private prisons, and that huge percentage of stuff like white goods and gets made in US prisons. It's basically slave labor. That's what it is. Nothing else but slave labor. There is a huge incentive for them to want to keep people in there. So for me, that sort of crosses a line, but I don't want to buy. There are plenty of things that I buy that other people might not like, like in stocks or smoking or that kind of thing. But I just think this is a really pretty evil industry. But yeah, they're going to benefit probably if Trump's lot puts more people in prisons and then possibly deports them. Law and order should, in theory, be good for these private prison stocks. I totally get the argument. Right. As a Canadian, how do you invest in American stocks? The exchange rate is I think it's fairly irrelevant. There are, however, Canadian ETFs that track the US stocks. and that might give you some tax advantages. I used to buy an ETF in Canada. I can't remember what it was called, because they didn't have withholding taxes. So Americans have withholding taxes on non-Americans, 30%, which is what I pay if I have income from the US, which I do, and I can't get around it. So you don't want to have companies that pay out dividends, because I would lose 30% on that, which sucks. So you want to have some sort of synthetic ETF if you're a Canadian. That's what I would look into. How was the masterclass in Zoom? I think the masterclass went very well. I think Zoom sucks. So I don't think I'm going to use Zoom again. I just don't really like it. I just don't think it's got the features. And they charge like 3 arms and 4 legs for it. I just don't think it has the capacities, the features of the stuff we normally use. We normally use a thing called Webinar Jam, which I actually really prefer, because you can have downloads and buttons and polls, and I feel it's like a lot more interactive. So anyway, I digress. So let's have a look at a couple of stocks here. Was there anything that broke out yesterday? Yeah, there were a couple. We called a couple of breakouts, like Lenza, for example, here, that had a really nice run up. So even on a day like yesterday, you have opportunities, right? And look at that. Was that a good buy yesterday? Yep, because it's trading already $2, 20% higher than it was yesterday. So that was a good call from yesterday. Why didn't I buy it? Because my cash hadn't arrived. It has now. So today we can actually do something about that. Will there be another live masterclass? A lot of you are asking for it, and I appreciate the enthusiasm. Mike, you don't like Zoom either. Yeah, I don't really get it. I'm open to it. To maybe do another one. I do very much enjoy them, so we'll have a look if we can squeeze it into the schedule somewhere. Let's have a look at some of our favorite stocks here. Most popular stock at the moment in Trade Vision, and if you haven't got Trade Vision yet, you're missing out, my friends. How do you get your pause on it? Here you go. You go to felixprehn.com/Trade Vision, get yourself a free trial, and get access to a lot of cool stuff. We've got some really cool stuff coming out shortly, because I get to play with all the beta versions, right? There's some really cool stuff coming out. Now, why am I opening that? This is what I wanted to open. Okay, Zusman, my friend, you're a happy chap, hey? So this is so far yesterday. Now, dropped to like 15.50, recovered to $16. Not amazing. This morning, it's trading at the top end of that range. Essentially, what they were saying, the criticism was margins weren't amazing. But basically, so far, we're saying, yeah, but we're reinvesting the money. They still beat on headline numbers. And guidance is always a sandbag with Noto. I have trust in the CEO. I don't have trust in a lot of CEOs. But when Noto says I'm reinvesting the money, I feel he thinks he's going to create a much, much higher return for us than if he wasn't reinvesting the money. And that guy has got about $300 million on the line. His bonus scheme, his incentive scheme is insane. He basically has to get the stock to $25 or ideally $35 to get paid. So that's very impressive. Mike says Trade Vision is awesome. Thanks very much, Mike. Appreciate that. And guys, yeah, if you're an options trader, we can now do all these kind of cool things, right? You can add legs. You can, have you seen that yet? You can do really cool stuff. You can do whatever you want to do, right? You can really go nuts with it. Sliders coming soon as well. There is also a little settings thing in the bottom right now where you can now add your commissions. How much commission do you pay per contract? A lot of people pay 65 cents. We can actually help you get that down. But say you pay that, then you would now see your profits with the commission included. But for non-options traders, so far yesterday, yeah, not a great dip, but very positive is for me this, and that is that you see the yellow line there, the yellow 50-day moving average line? That's what that is. A little pen here for you. Who here knows what a 50-day moving average line is? If you know what it is, then put a 1 in the chat. And if you don't know what it is, put a 2 in the chat. I'd like to see it. That's a 50-day moving average line. And you see how that was the stop. That was the low point, and then we bounced off it. And that's actually quite positive. Now, overall, of course, it wasn't a great day. We had a gap down here, which isn't great. So gaps are usually down, certainly are very, very bad things. Okay, some ones there, okay. Not too many twos. It's essentially just the stock price over the last 50 days smoothed out. It's like the average, right? That's really what that is. Okay, a lot of ones there. Okay, brilliant. Okay, I'm glad you guys understand what that is. But really what we want to see today was what we're starting to see is that it's recovering, it's rebounding, because actually if you look at the numbers, they're pretty freaking impressive. Earnings were good, best quarter ever. And I think you just have to read a little bit between the lines that they think reinvesting is going to make, they're building something that's going to be really, really freaking profitable. A little bit of trust is always required, but we'll see how it pans out. So what we did yesterday is we sold some put options. I did. I sold some put options yesterday, which I'll show you that setup as well. Yeah, that's basically the trade. So anywhere above $13.14, I make money. And if we do close above that, we'll make how much? About 30%. So I think that was a great opportunity to make some really easy money on SoFi. There's risk with everything, you need to understand it. But yeah. Jason, you want to buy NVIDIA calls today? Okay, let me give you a little pulse check there, whether or not that's a kosher. Okay. Before you guys run out and buy options, right? And I know a lot of people go buy call options. There is a little thing in here, and it's in TradeVision, tradevision.io, links down below. It's called IV percentile. That tells you whether or not options are expensive or cheap. And you have to understand this, even if you're just buying and selling plain vanilla options. So it goes from 100% to 0%, right? At 100%, options are really, really freaking expensive. At 0%, they are so cheap, you're going to want as many of them as you possibly can. So, my friend, before you buy NVIDIA call options, please understand this. It's going to work against you. The IV is going to come down, certainly after earnings, and it's going to hurt your trade. You just need to understand that. I'm not saying you shouldn't do what you're planning on doing. I'm just saying you need to understand that. If you don't understand that, please go and get some help on it, because that's the only way you become an amazing investor. And you deserve to be an amazing investor. Now, NVIDIA, different story. We closed yesterday below the 200-day moving average line. That's what that, I was going to say shit-colored line, but that would be impolite, wouldn't it? That brown there line there is the 200-day moving average line. This line here is the 150. You don't want to be below that. It's really not good. Now, today we're recovering. We're bouncing up it already. We're at 121. We bounced off it a little bit, but there's clearly still a little bit of fear out there, right? Like, how much of this is true? Doug, you're checking the IV? Good, good, good. And it's IV percent you want to check, which is why we give it. Most websites don't give you that. Most brokers don't give you that. They give you IV. IV is useless. You need IV percent. Not IV rank, not IV, you need IV percent. That's the only number that actually matters for options buyers, sellers, traders. Buy options after earnings, exactly. And before earnings, generally speaking, you want to sell them. So you could just sell a put option or something like that, and put that wherever you want to buy at, say, 110. If you're happy to buy NVIDIA at 110, you could do that. You only make, there you go, out over earnings. It's a risky move. I wouldn't recommend it. I wouldn't do it. But when are earnings? Earnings are on the 26th there, right? So if you got out before earnings, actually, it wouldn't be a great trade because IV isn't going to go down. So you'd have to do it till after. That becomes crazy risky. So I wouldn't touch it. Wouldn't. At least not in this particular setup. All right, so there we go. So let's have a look at some of the other favorites. Now, Palantir dropped yesterday. Does that make sense? This is not a company that makes chips. This is not a company that sells chips. This is a company that is offering a data service that is somewhat powered by AI. So what you're saying is that if the DeepSeek story is true, at least partially true, I think they do have an efficient model. I don't think people doubt that. then it'd be cheaper for Palantir to run their system. Right? Running AIP would be cheaper. And it'd be cheaper for their customers to run it. And more people will adopt AI because it's cheaper to run. So why is this a bad thing? Again, can somebody explain that to me? Does that make sense to anybody? No, doesn't make any sense to me either. So yesterday made no sense. So market yesterday was kind of nonsensical, really. But today we are at least, actually we're down 0.94% right now, but looking a little bit better than yesterday. That's the little candle here from today. We're just trading at the bottom end of that range. Does Robinhood give IP percent? I don't think it does, no. Almost no broker does. I don't know any broker that does. They just don't. Brokers generally don't understand options. That's kind of the problem with most brokers. I think Tasty is possibly the only broker that does, but they sold it to IG, and I'm sure those guys don't understand options either. GM, really? That's not a stock that normally gets mentioned. General Motors, the dinosaur of the car industry, down 3.3%. Earnings missed. That's why. They missed on earnings. So not really surprising that they're down. Not a big fan of that business model. It sort of falls into the Ford category for me. I appreciate they have good brands, but I'm not a big fan of the way they work. And Zach, also, you're quite right. Tariffs. Trump is saying there'll be tariffs on steel and aluminium and chips and so on. So that could hurt General Motors' non-existent margins. Can you explain about block orders? Okay, block orders are basically, and we show them here in Trade Vision. We call it SMART. I think it's not the greatest name, but for some reason we called it that. You can basically see the large orders here, including block orders on trades. They are just large trading companies, hedge funds, and so on, who are trading in private, not on the stock exchange. And it's now more than half of all trades happen in private, not on the stock exchange. It's all about transparency, folks. So they basically can agree in private prices. They don't have to go work with bid and ask prices or any of the stuff that we have to deal with. And then it goes into these private exchanges, which are completely legal, regulated, but out of reach in terms of information of most people, which is why we give the information to you inside Trade Vision. Is Tasty available in Europe? I believe so. Yes, I believe it is. Okay, what else we got? Any questions, my friends? Put them in the chat. I'll do my utmost to answer them. In terms of pre-market, gentle, cautious rebound, not a massive one, 2.8% up when you went down. What was it yesterday? 16% or something? Yesterday? Can we have yesterday? Oh, no, we can't have yesterday. Actually, this is the live market now. So this is markets open 4 minutes ago. Nvidia's only 0.9% up. That's not much of a rebound, is it? So the market's still a little bit spooked. It's starting to realize that this would be good for Meta because they'll have to spend a lot less money on chips, and makes no sense that Tesla is down. Maybe people are a little bit skittish about earnings coming up. Won't Jerome drive stocks lower today? Why today? Hang on, let me just change the events to the United States. Powell speaks tomorrow afternoon, Fed interest rate decision. Would be lovely to get a surprise rate cut. I'm not counting on one. I kind of feel that the Fed wants to sort of make a stance that they are actually independent. I don't think they're independent, but they want to claim to be independent. So I don't think we're going to get anything there. But as long as the press conference sort of acknowledges that the labor market data is cooked and the market is softening, that could be interesting. It could be very, very beneficial. If we get a rate cut, you're going to get a massive freaking rally. Who knows? You want to see year-to-date performance in there. Okay, interesting. What does that tell you though? Year-to-date performance. You buy the ones that have outperformed, or you buy the ones that have underperformed? Ones that underperformed are probably rubbish businesses. The ones that are outperformed might be too expensive. I'm not sure it's that useful. I know everybody includes these sort of charts, but I always wonder, what does it tell me? I don't think it really tells me that much. I'd rather know which ones have a lot of momentum. I think that'd be interesting. But I'm not saying we shouldn't include it. Why is SoFi dipping? Is it? Have a look. So earnings were good, margins were less than hoped for, and guidance was a bit, neither here nor there. So we are back to making out with the 50-day moving average line. We're trading exactly at that level. We want to close above that 50-day moving average line to keep the Oompa Loompas happy. Now, do we ever break below it? We did it here, right? And then we rebounded quite rapidly up. And I'm sure we've done it a few times previously, like down here and down there. And they were actually generally quite good buy opportunities. But not brilliant to be below the 50-day moving average line where it's sitting right now. So the market's still a little bit spooked. And these guys probably have something to do with it. Doomberg. You see this? DeepSeek challenges everyone's assumptions about AI costs, which you'd think would be broadly amazing for the market. Because if it's cheaper to use AI, everybody will use AI and everybody's margins will go up, including Meta and Google and everybody else. It's only bad if you're making chips. So this whole across-the-board sell-off makes absolutely no sense. No sense whatsoever. And Trump wants to have universal tariffs on basically everything and get rid of the income tax. Is that good or bad for stocks? I think it's tremendous for stocks if he gets that through. Boeing sees company reaching key output goal this year. They will make an entire plane that won't lose any doors or engines. Okay, RFK is pretending to be a level-headed, kind of centric, so he can get confirmed, and then I'm sure he'll revert back to his typical farmer-hating loony self, which I very much like him for. The companies be concerned about road code growth, and no US enterprises on other scale is going to use a Chinese AI because they just know they're going to have so many problems with regulators in the US. They'll just wait to do it. Schwab has an international account available in Europe. Thomas, yes, thank you very much for sharing that. Microsoft Go Private, is that like a paperclip? Is it really that annoying, that paperclip? That was really annoying, wasn't it? NVIDIA gap, let's have a look. NVIDIA. Up 0.8%, 0.4%, not a lot. The support, you can see that here. Can you see, let me get rid of some of the other lines so you can see it a bit more clearly. Can you see, let me get rid of that too. That green line here, that's the support line where market makers had to buy NVIDIA. They did yesterday, but they failed. They didn't buy enough. They got beaten, and it dropped from 130, the support, to now 110. That's not good. Why is that not good? Because it means everyone's moving their positions down, so it's definitely not a good thing. So that's an indicator, by the way, you literally will only find inside TradeVision. So get yourself a free trial to TradeVision. Software that we built. So I'm not shilling somebody else's stuff here. It's just generally what I use every day, and I think it's insanely useful. But right now, NVIDIA is trading below its 200-day moving average line, and it's struggling to make it above yesterday's lows even. So not brilliant. Not brilliant, really. The dip buyers are not here enough. Any new improvements to TradeVision coming along? Yeah. Yeah. Lots of stuff, my friend. Lots of stuff in the pipeline. We're testing out a bunch of stuff. The mobile app looks a heck of a lot better. I've just played with it, actually. I need to play with it some more. And a lot of options features coming in. We have about 12 people working on this full time now. So we're working on a lot of things at the same time. So the feature release stuff and improvements, you're gonna notice them coming out faster and faster and faster, which I'm super excited about. So we will announce them all as we always do up here under notifications here, as you can see what we're up to. And then also under the tutorials, you'll start to see explanations for everything else that we're putting out here. We're still catching up with a couple of things there because we're putting features out so quickly. So we give you all of those features for free when you're an existing user. I think you keep seeing that, and we do that because we want to say thank you for your early support, and also because we just want to build this for you, for the community, and make sure everybody has the best data they could possibly have. And for that, we just want to reach more people. So check it out. What do you see for KMDA? Not a lot. It's down a little bit since we got into it. I got into it. It's down about 3.6%. I can see here. Not particularly concerned by that. It's just sort of a sideways wobble. It's more. This is market sentiment rather than the stock. We're still slightly above here, that sort of range, then nearing the bottom end of that. But the breakout was down here, right? Where was it? It was here. This one. This was it. So at the very bottom end of that, I tend to give them a little bit of room to breathe. I'm not seeing anything scary here right now. I think also I quite like the stock fund. You're gonna have your risk management set up, which I do. There is a stop loss on that thing, and that's important. Now, VIX is climbing. Is it? VIX trade's making a little bit of money. You see, that's another thing I looked at yesterday, and I thought the VIX didn't really spike that high. A VIX at 18, okay, it's not a crashes me or we should jump off a cliff type VIX. A VIX up here at sort of 27 is what should make you feel antsy. In August, that was the Japan thing. We went to 65. Now, that should have you very, very concerned. But in a sort of below 20, I wouldn't be worried at all. Low 20s, interesting. Definitely look at your risk management. But at 18, where it is right now, it's not saying to me the end is near. Everything is dropping so fast, says Another, enjoying a little bit of fear. Look how small these moves are. They're very small moves. Don't freak out when things move a couple of percent. That's just normal. So no, I don't see it as that. I think we have an opportunity here. I'm going to wait out to see what the sort of midday brings. We have inside Trade Vision a breakout indicator, and we update that halfway through the day, so at midday and then the end of the day. And I'll definitely have a look at that when I get that email today. Yesterday's breakouts were these here. Some good calls there. ICAT, LNSR, XNet, all up 6, 12, 4%. There's always an opportunity. Always an opportunity. But the first thing and the most important thing is that you have rules, so you have structures, so you have a process that you trust and follow no matter what happens. How do you get that? I think the only way you get that is by learning it from somebody who's been taught it. I honestly think that's the only way. That's how I learned it. I've never met anybody who was like, oh, I read all these books and I learned it from them. I've read all these books. I've got all these books here behind me that are insanely complicated, on volatility and market psychology. And you kind of need a book to understand the book because it's that bloody complicated usually. And these are the ones that are written by smart, allegedly successful traders, but you can't bloody understand them. And they just like to make it complicated. They just want to show that they're a freaking genius. And they're not. Everybody's following a very, very similar system and pattern. And once you understand that pattern, and you have your automations and you have confidence in it, then like some of you guys were saying here, even on days like yesterday, you you do all right. You'll close out some small losses, but you see, small losses are part of the process, and people need to understand that. That's part of the process. That's a good thing. Small losses are a good thing. Big losses is the thing we want to avoid and we need to avoid. And if we don't, we're doing something wrong. And the small losses are not an issue because we make large gains. And the large gains over time will make us a lot more money than the small losses. Scott, I'm a goat. Brilliant. Guinea Pig says the trade vision indicators really help. Thanks for sharing that, Guinea Pigs. And okay, Alex is asking, how could my risk management save me from VRT? Let me have a look. VRT, Vertiv Holdings. Yeah, that's a tough one. And those things will happen every once in a while. They won't happen that often. If you go back on the chart, you don't find an event as stark as that one there for like 2 or 3 years. So will you have some outliers? Yes, yes, you will. So here yesterday, hang on. What would have happened is the market opened, say your stop loss was here at the 50-day moving average line, then you actually would have exited right at the top there, right? So you would have exited at like sort of 118 or something like that, which still would have saved you another $20 drop, right? So it went down another $20. So that's still a win in a sense. Now, of course, it doesn't feel amazing, but the question is then also, where would you have bought it? So where was the actual breakout where you got into it? Because that's also the important thing. It's like, when would you have gotten into it? Let me see if I can find a textbook breakout here. Anyone can see one? We need a lot of volume for that. Nope. Really? See one. See. This arguably, no, not really. That one here. That was the last time I would have bought it. It was August 2023. So if you bought it August 2023 at $31, then the fact that you got out at, what was it? 117, pretty freaking big win, right? So what we need to all learn and understand is entry, exit, and how do we automate that risk management, and how do we stay level and calm-headed, and then essentially understand the 4 patterns of the market. And if you understand that, and you are following that with the discipline, and I think that you get the discipline from having somebody check on you at least once a week, that's what I would recommend, then somebody who knows what they're doing, then you have these big wins, and that's really the beauty of it. So there we are, my friends. I love you for watching. I love you for tuning in. Make sure you get yourself the Trade Vision trial down there. And if you have some questions, like some of you guys have here, on something a bit more fundamental and so on, then have a chat with us with felixprehn.org/freedom and just find out whether our style of mentoring might be the thing for you, because there'll be days that are much worse than yesterday, much worse than yesterday. And you want to be prepared for that, so that not only do you protect your money, but you actually set up things that help to make you money in those. That's really what it's all about. And protecting your money is the most important. As an investor, it's the number 1 rule, is protect your capital. If actually it's the number 1, 2, and 3 rule, really, in my book. And if you know how to do that without breaking into a sweat, and you have your systems and your automation set up, then nothing bad can really happen to you. And you'll sleep better, you'll make more money, and life will be much better. So have a chat with us at felixprehn.org/freedom. I wish you a beautiful day. Thank you very much for tuning in, and I hope to see you live tomorrow. FOMC rate